Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup and the market strategies you need to focus on in today's trading session. We'll start off with a recap. Yesterday's session, that was the beginning of a new week, turned out to be a muted session for the markets, especially for the frontline indices, the Nifty, the Sensex and the Nifty Bank. The indices consolidated, Nifty consolidated within a very narrow band of just 82 points range throughout the course of the day. So it was very, very choppy in that narrow band of trade as well. Of course, it's the tariff-led uncertainties that continued to hover on the minds of investors, and overnight it led to a sell-off on Wall Street overnight as well. Remember, until last week we were celebrating record highs after record highs on the Wall Street as well, but of course the tariff news that's come in from Donald Trump. He's been sending letters to at least 14 countries have got letters for fresh tariffs that will be imposed starting 1st of August. That led to a lot of sell-off on the US equities. S&P 500 down 0.8%, Nasdaq down by 0.9%. We've also seen Dow Jones also slip in trade as well, and this has also led the Asian market starting on a mixed band as well. Now, what has really happened? Donald Trump has sent out letters with unilateral reciprocal tariff rates. There is no letter for India yet, but Trump says that they are close to making a deal with India. They're also pointing out that tariff rates on other countries look identical to the Liberation Day tariffs that were announced on April 2nd. The only new news was that 1 month delay with respect to the date of implementation will be now 1st of August. Now, if you want to understand a little deeper, Donald Trump has imposed a 25% tariff on imports from Japan and South Korea and also Malaysia. Donald Trump has also pointed out that Bangladesh imports will be taxed at 35%. It was 37% earlier in the first instance that they had announced the tariffs. Now, Trump letters also state that these tariffs are separate from any sector tariffs. Also, Treasury Secretary in the US has also pointed out that they are going to have several announcements in the next 48 hours with respect to details of what these tariffs stand for and what could be coming in going forward from here as well. So that's going to be extremely important to understand. Let's listen in to what Donald Trump had to really say about a deal that could happen with India and on the tariffs as to whether these are final tariffs or whether there will be any negotiation on this.
Close to making a deal with India. Others we met with, and we don't think we're going to be able to make a deal, so we just send them a letter. If you want to play ball, you have to. This is what you have to pay. So as far as I'm concerned, we're done. We're sending out letters to various countries, telling them how much tariffs they have to pay. Some will maybe adjust a little bit, depending if they have a cause. We're not going to be unfair about it.
All right, so you heard it from Donald Trump as to what he means when he talks about the tariffs. Let me welcome our guest on board. Mr. Dharmesh Kant is with us, Head of Equity Research, Chola Securities. Warm welcome to you, Dharmesh ji. Thank you so much for taking the time out. We're finally 1 day away from the deadline of July 9, and we are already getting to see that those countries that fail to make any kind of an agreement with the US have to probably go back to the initial announcement of Liberation Day, and the tariffs will be now implemented, although they still have time. 1st of August is the deadline, which Donald Trump says that these tariffs will get an implementation. Although Asian markets are not too worried at this point in time, probably even if we look at Japan, it's not a bloodbath there, and that also gives us some sense that probably these countries are hopeful that by August 1 there should be some or the other deal that could be reached again. Although Donald Trump did say in his interaction with the media that he is firm about the tariff announcements that he has made. But of course, in case there is some kind of a negotiation to take place, he'll be happy to take that forward as well. So far, no deal with India yet, but what's your stance that you would want to really hear from the US, sir?
Yeah, good morning, Sakshi. Thanks for having me. See, this is a time-buying kind of a strategy which Mr. Trump has been adopting, and he is giving enough, elbow room for negotiation and leaving it on the table to be negotiated. At the same time, my base case scenario is for this year, calendar year, CY25, if you look at it, effectively 6 months will be a period when additional levy of, say, blended 10-11% will be there, which will be passed on into the system. Whether it is absorbed by corporates or by consumers has to be seen. extending the deadline to say August 1 for additional tariff, which is like the liberation date kind of a tariff, like 25% kind of a thing. So 3 months of inventory all the corporates have. So practically this year, passes on without that 25% kind of a tariff being kicked in. However, for second half, I mean beginning of July and August, you will be seeing around 10% kind of a cost rise into the system. So that we have to see in how it gets negotiated. More or less, this kind of a cost hike, by this time, most of the corporates have already built a strategy to tackle that. There will definitely be moderation in corporate profits to that extent. And to our mind, I mean, it's a very rough kind of a calculation. Around say 2%, 2.5% kind of a hit on the corporate profitability will be there for most of the companies which are into mainly exporting. I mean, if more than 60% of the exports are there, then this is the impact which is likely to be there. India, we have to see how it pans out. Likely, it will be a more of a structured kind of a tariff deal where most probably agriculture and dairy will be left out and the others levy will be there. So even for Indian companies which are more into product manufacturing and exporting to US, the hit would be in the similar range. It's coming, but yeah, most part of this year has been taken care of.
The Nifty started on a volatile note. You can see 25,396 right now, a 0.25% lower for the Nifty at this point in time. We'll wait for it to settle down till 9:07 and come back to the markets. Meanwhile, I'll start off with the sectors that may see some reaction of these fresh tariffs from Donald Trump on various countries. On Bangladesh, especially when they've pointed out a 35% tariff, not too much different from the 37% they had announced initially. When the announcement had come in, we had seen a spike on names within our textile band, like a Gokul Das or a KPR Mill. How are you looking at the textile story, sir? Do you think there is any chance for them to benefit and probably look for, a kind of taking up some of the opportunities there?
I mean, today the market will definitely give a benefit trading day to them, and you are likely to see a pop-up coming there. But if you look at all the textile companies, the basic fundamental is around 50%, 47 to 50% is the cost of the raw material for most of them. And 12 to 13% is the labor cost. It is here where, countries like Vietnam and Bangladesh and China gets the maximum advantage because in China it's mainly machine driven, automated kind of a process there, and Vietnam and Bangladesh the labor is very cheap. So that elbow room can be negotiated if the tariff on Indian textile manufacturers are low. Presently, it is 26%, so not much of a difference between what is being levied on, say, Bangladesh or Vietnam and vis-a-vis to India. So, I mean, it's a difficult call to take on a long-term basis. If it is around, say, 28 or 30%, then it's a neutral playing field. Indian textile companies won't get any advantage. Anyways, the growth of Indian textile has been very anemic, except Gokaldas, which has been growing very well. And they are into finished garment segment rather than the textile play. So there's a difference between there. And mind you, Gokul Das, the employee cost itself, the labor cost is 31%, which is pretty high. So it's the most sensitive company in the entire textile basket and trading at very high valuation multiple. So to my mind, if one has to play it out, hoping that things will play out in favor of India, Welspun remains a better choice with Urban Limited from the textile segment, where valuations are a bit comfortable compared to its peer group.
Okay, got that. Now, Dharmeshji, let's also focus on when it comes to, the key sectors that could be a conflicting point between India and the US. Right now, we are given to understand what Mr. Piyush Goyal has hinted out is that he's not worried about a deadline, but he wants to get a win-win deal. Until that happens, India is not going to bow down. So, both the countries have actually drawn their red lines when it comes to certain sectors. We've had a long negotiation, but of course, all our negotiators are now back in the country. The ball is in the US court at this point in time as to what they finally decide on the tariff front. We have a relationship between the, top leaders of both the countries, and that's what we are hoping that could turn in favor for India at this point in time. But when it comes to the sectors that US has been looking for inroads, dairy, farm, agri, that's where it will be extremely difficult for our government to agree because of the political sensitiveness that they have and the upcoming elections as well, in case there is any negative on that front. How would you really read into what could go wrong when it comes to market sentiment, and what could probably just stay the course, and even if not be an enthusiastic kind of a deal?
See, Sakshi, to my mind, I am very clear. Indian government won't budge on this dairy and agri segment because it's very politically very sensitive. I mean,
Yes.
what could go wrong? Government can fall if US is going to have its way. So I don't think that is a likely scenario. And the very fact that Mr. Trump has said that it's near, deal is near getting negotiated. So 9th July deadline also goes away because the implementation date now is 1st of August. So there will be a window of some opportunity out there. And let's see. I mean, this is a very tough fought battle. I mean, state elections are one thing. I'm worried about the central government itself if things go wrong out here. So that won't happen. That is for sure. The hit on other segments and commodities can be there. I mean, but the only worry is the sectoral tariffs which he has not implemented, and that is where the key concern for India lies. And primarily speaking, I mean, pharma sector is one space. The EMS is the another space where if Mr. Trump acts to sectoral tariff and not blanket tariff, India will get impacted because blanket hardly automobiles. I mean, hardly any exports are there into US. Auto and auto ancillary is the one sector which can get impacted out there if things go wrong. But sectoral tariffs on pharmaceutical and EMS would be a major dent on the Indian manufacturing side. So it's a very, I mean, tight rope. Balancing act has to be there, and I'm very sure Indian government will come out with a good deal. Had it not been there, actually, it would have been already announced by Mr. Trump, knowing the kind of volatile nature this person has, and he immediately shoots off later. So if he's waiting, definitely the bargaining power is lying with Indian government.
Okay. Let's shift focus from the US tariffs that will continue to remain a talking point for the next couple of days till the time India really gets to see, some deal, which we are hoping to get tonight, right ahead of the July 9 deadline, or at least here on the extension or any statement that could probably calm the nerves on the D Street as well. The other big issue regarding the markets that we've been seeing from the last week is SEBI's order on Jane Street, and how that has led to increased scrutiny and surveillance that SEBI has pointed out that they are going to be continuing to see on the weekly options expiries, on other indices as well beyond Nifty and the Nifty Bank too, to see if there is any kind of other signs of manipulation that has happened. Now, SEBI chief Mr. Tuhin Kantapande yesterday did reveal that they are going to be releasing the white paper. A study has come out as of late evening, which has now pointed out that 91% of the retail traders again have lost money in derivatives in FY25. They also have pointed out that the net losses of individual traders have widened by 41% to over 1.05 lakh crore rupees in FY25, and average losses per person in FY25 had increased to over 1 lakh rupees as well, from about 86,000 rupees in FY24. So there is this increased, worry with regards to whether retail investors are continuously losing against large hedge funds like Jane Street, operating with massive machines, algorithms, quant, which is impossible to compete against as a small retail investor. And what happens if such companies, they continue to trade in large quantities, thereby shifting the market moves? That's what was the big highlight point from SEBI's study as well. How are you reading into this, and what do you think an average retail investor must know from here?
Yeah. Yes, actually, I mean, look at it. The basic objective of market is price discovery based on future prospects of our company and providing enough liquidity to the investors who are there. And I mean, if you look into the Jane Street kind of a method which they have adopted, they use the muscle power of cash they were sitting on, and it was a blatant misuse of the system while within the time limit. So that is where the retail investors get trapped. It's like if you are lucky enough, you get into a moving train and you jump out of the moving train in between intraday, you could have
Yes.
made some gains. And then again, the greed increases. First time you will make 0.5% or 0.25%, then you want 1%, then 3%. Sometimes you are lucky, and that is where the entire trap gets built into the system. And that's the reason why 9 is to 1 kind of a ratio we are seeing on the losers and winner kind of a scenario. So SEBI, I mean, kudos to them, hats off to them. They have done a splendid job. But this will definitely do is, I mean, one of the news articles I was reading in a leading newspaper, it suggested that India is the largest derivative market in the world. So this kind of an activity with only 4 trillion kind of a market cap is always, raises your eyebrows and points finger to in the wrong direction. And that is what has come out. To my mind, the volume participation is definitely come down with lack of weekly expiries as well. And the volatility in the market, which we have been seeing 300 points instantly up in 15 minutes, and then you have seen days when 400 points of Nifty cracked within 5-7 minutes. So this kind of activity will stop. The volumes will come down for, I mean, stockbrokers. Loss of business will definitely be there, but it's good for the entire health of the market, where retail investors who were used to illusionary kind of a trades will be back to real trades. And now, I mean, real price movements can be restored in the market if SEBI acts more strictly and scrutinizes it in a more detailed way.
Absolutely. Now, we do know that India is the world's largest derivatives markets, accounting for nearly 60% of the global equity derivatives trading. Volumes of 7.3 billion trades were recorded in April. The Futures Industry Association has marked out these data points for the media to consider. Now, we do know that after SEBI's allegations on Jane Street now plans to contest their findings by, of course, looking at any legal opportunities that they can seek at this point in time. Reuters has mentioned that they have accessed Jane Street's email to send to their employees, which mentioned that Jane Street believes they were beyond disappointed by SEBI's extremely inflammatory acquisitions, is what they have marked out in their email. And they are working for formal response too. Now, of course, this situation will be developing, and we'll keep on talking about as to what is the to and fro, how are the actions going to pan out between SEBI and Jane Street, and of course if there are any other companies that will get any warnings. But I think the big question is on the trading volumes in India. What some of the analysts have pointed out is that on Monday, the F&O turnover on NSE was at 91.4 trillion rupees, which is a 26% drop from the average of previous 12 Mondays. Similarly, last Friday's turnover, when SEBI had actually, talked about this ban with effect, the Friday's volumes fell by 9% compared to previous 12 Fridays. Now, F&O volumes typically peak on Tuesdays and Thursdays due to the weekly contract expiries, and although experts still believe it's too early to really truly assess the impact. But Dharmeshji, do you really see such large hedge funds which are practically contributing about 40-50% of the overall volumes, once they are absent from the trade? What does that mean for the overall market volumes? How will they be impacted? And will that also in turn impact retail?
Yeah, definitely market volumes will be impacted. It's likely to go down further because it's a cascading effect which happens. A lot of prop trading decks, a lot of high HNI individuals also participate, and their volumes also increases seeing the volatility because they all have the algorithms in place, and that algos get triggered. So, but the here what SEBI is contesting is the basic origin of algo was not algo. It was a manipulated algo which, Jane Street was playing with. If it has been proved, then the balance of the algos gets triggered because of the Jane, initiating the system. So if that
Right.
initiation part is not there, then definitely people, the algos will be triggered and volumes will automatically drop. So that's definitely is likely to happen, and we also seeing the drop in the volumes, and it's likely to drop further, going by the way things are happening. Because once your expectation gets tempered, you participate.
Okay. Let me also welcome Arpit Beriwal, analyst derivatives at Wealth Management, Motilal Oswal Financial Services, also joining in on the program with us. Hi Arpit, warm welcome. Good morning to you. We'll also discuss with you the details of how SEBI's ban on hedge funds like Jane Street is working out and what could be in the offing. But for your first take on the markets, we've started to take on a lower end, 22 points lower, 25,430.
To all. So first talking about the headline indices, if we see Nifty and Bank Nifty particularly from last couple of days, it has gotten stuck in a range. So talking about Nifty as a whole, if we see the weekly structure, it is hovering about 25,250 zone. That was the previous supply zone. But on the daily scale, if you've seen some profit booking was seen in last couple of sessions. However, last week on the Friday, we've seen good recovery from the lower levels. And looking at the overall chart setup wise on the daily and the weekly setup, we expected Nifty to consolidate between 25,300 to 25,650 zones. Overall, our bias would be positive till Nifty holds above 25,300 zones on the closing basis, on an upside move towards 25,650, 25,750. Now talking about Bank Nifty, so Bank Nifty, if you've seen since the start of the series, it has got stuck in a range of 1,000 points, where it's trading a life high territory, but still the momentum is missing out because selective banking heavyweights are underperforming where selective are moving. So overall, Bank Nifty is expected to consolidate between 56,500 to 57,500. However, 57,100 yesterday also it was facing some supply pressure, so it would be important to watch how Bank Nifty reacts near 57,100 for an upside move towards 57,400, 57,500 levels.
Okay, let's quickly look at the markets a little bit. 24,435 flat with a negative bias move on the market. Let's look at the sectors that are still up. You have the Nifty Bank slightly higher in the green, about 1% odd or so, led by private banks that are up half odd percent. Financial services also up 1/10% higher. Apart from this, autos are also slightly higher. Mild gains can be seen on this pocket again. IT is just trying to come back into the green from the red start. We are again looking at some of the pockets that are lower. So the broader markets are still weak. You can also see real estate, pharma, infra, media stocks, consumer durables also slightly weak, but the markets are volatile. Let's see how it pans out. Top movers on the Nifty are Kotak Mahindra Bank, about 4% higher at 2237. That's the level at which you see Kotak Mahindra Bank at today. Tata Motors about 0.8% higher, Eternal at 261 about a percent higher after yesterday's losses, ONGC up by 0.7%, Geo Finance, Wipro. So some consumer stocks, some IT stocks, NBFC names, banking names that are holding up in trade. What's down? Titan after the Q1 business update that we will just discuss with Dharmesh ji. That's down by about 4.5%. Dr. Reddy's, Cipla, Sun Pharma. So pharma stocks are actually lagging behind at this point in time. That's the immediate start that we have. Arpit, very quickly, any two stocks that you would mark for our viewers to take a trade in right at the open?
So if this is actually overall market has been quite dull, but selective stocks are still in action. So first would be SRF. If you see overall SRF has been a huge outperform within the entire fertilizer and the chemical space. So technical on the monthly and the weekly side, it's quite strong. On the daily scale, it gave a range breakout above 3150 and holding well in spite of dull market. So one pick would be SRF. One can go long at current levels with keeping stop loss around 3150 for an upside move towards 3350, 3400. Second would be from the telecom space, that is Bharti. So overall, if we see the structure of Bharti Airtel, it has been relatively very strong. From last 7 to 8 sessions, it's trading in a range. But overall, if we see the bigger time frame structure, the base of the stock is slowly, gradually moving higher. So it's a clearly buy on dip counter, and any dip towards 2015, 2020 would be a good buying opportunity. One can go long also in this counter with keeping stop loss of 1990 for an upside move toward 2080, 2100 eventually.
Okay, got that. So that's the view coming in. All right, Dharmesh ji, let's start off by discussing the other key big trigger that will be the earnings season that kickstarts this week itself with IT sector coming up with the first set of the numbers. What's your overall outlook, sir, on the earnings season this time around? And how would you really approach IT sector, which will be the first one to report results?
Yeah, I mean, earnings season this quarter would be a muted kind of earnings season again. I mean, 5-7% should be the Nifty 50 earnings growth in this quarter, but this should mark the end of the low growth trajectory of the earnings which started last year, Q2 onwards. So I think after 3 good years of GDP growth and earnings growth, last year was a year of transitory consolidation on the economic front, and that is likely to end by this quarter. Q2 onwards, things should start picking up. So our base case scenario is around 12 to 14% kind of an earnings growth for Nifty 50 companies for FY26. And the sectors which are likely to contribute to this growth is primarily BFSI segment. So entire financial space, be it NBFC, private and public sector banks are likely to contribute heavily, and they are the almost biggest weight in the entire index system, followed by automobiles. It will pick up from Q2 onwards, and then you have the metal plays, railway, infrastructure, defense, building materials, and maybe a company like Reliance Industries on a standalone basis. They are the ones which are likely to contribute positively to the earnings growth. IT is a catch point. It's again will be a muted kind of a year for IT space. I don't think they are going to deliver earnings growth on the higher end of their guidance. It would be at best be in the mid range or a lower end of the guidance for this year as well. So don't expect much from there. Trading activities may still play out. What we are negative about is most of the FMCG space. They will deliver 5-7% kind or 8-9% kind of earnings growth, but that is the end of it. They won't be delivering double-digit kind of earnings growth, be it Britannia, Nestle, HUL, and the likes, Dover, and all. So they are the ones who would be disappointing, followed by muted or a stable kind of a pharmaceutical. So pharmaceutical again we're expecting 15-17% kind of a PAT growth. And nothing great, but at the same time it will help averages to come up. So this is the entire texture of the earnings growth trajectory. So we are going constructive on the market.
Okay. Dharmesh ji, before we come to other pockets, let me just quickly take one view from Arpit on the IT sector ahead of the earnings. Any technical position should one take? Arpit, do you believe?
So, Sakshi, if we see overall, the mid-cap IT has relatively outperformed if we talk about the entire IT pack. And if you look at particular chart structure of Coforge, it is trading at life high territories and huge outperformer. So I think from the setup and from a positioning setup wise, definitely if we see some positive momentum going ahead, Coforge is likely to lead and can definitely head towards new life highs trade towards 2050, 2100. So Coforge would be our top pick within the mid-cap IT space going forward.
Okay, Coforge will be the top bet. Beyond the IT sector, I think Titan is something that we are all watching out for today, and the gems and the jewelry space, which has been in focus because of the business updates they've been getting in. For Titan, domestic jewelry business grew by 18% is what they say. Brokerage houses are divided in terms of the approach that they have on Titan, even though they do believe some sort of a below estimate number has come in on the sales figure, but the kind of resilience that has been shown despite the geopolitical tensions and the rising gold prices, that's still on point at this point in time. So we have a CLSA report that has a 4,326 kind of a target on Titan after the Q1 business update has seen. What would you say on Titan, sir, Dharmesh ji, and the entire gems and jewelry space this time?
See, Saki, first thing is that entire space is expensive if you look at the valuation metrics. Secondly, they are very sensitive to the prices of gold. So gold, to my mind, now will go into a time-wise kind of a consolidation, plus minus 4-5%, because all the geopolitical issues have been settled. At the same time, the tariff thing is getting settled down, and market will be back to normal. Will accept the new economic order, which or whatever is there. And having that in regard, I don't see now further traction in gold price, at least for a year. It has run up very sharp and it's likely to rest there. So, I mean, consumer sentiments also adjust to the pricing levels. If you have to buy for a marriage or, jewelry, you buy it. And there are certain yearly allocations on the gold front. So that is also likely to continue. Having said all this, I think Titan stands to be a bit, overvalued on the valuation metrics front, and competition is very increasing. In the same space, to my mind, PN Gadgil is a much better play, though it is Maharashtra centric. But if you look at the growth trajectory of this company. They have done phenomenally well, and it's cheap. I mean, it's available at 35, 36 time PE multiples with 20% plus ROE, which other jewelers are lacking, and they are very, very capital allocation. They are very conservative and very prudent about it. So that is seen in the operating margins of PN Guardian. So that is one play. If you want to be in jewelry sector, we are liking it. Other than that, I mean, the rest looks to be a dicey player just on the valuation metrics. The business will continue as usual. Say Titan is at 18%, somebody will 15%, 17%, but that's the growth trajectory which most of these companies will carry on.
Okay, PN Gargil has also reported their business update, a 2.8% year-on-year increase in total revenue at 1714 odd crore rupees for the first quarter. And that's something that will also get reflected in the prices today. Let's look at the textile stocks. We started to talk about the tariffs on Bangladesh that were announced by Donald Trump. The impact of that, we were already pre-discussing it before the markets opened. Let's pull up stocks like Gokaldas Exports, KPR Mill, Arvind Mills. We'll pull up all of these stocks for all of you to really see how the impact is being seen across the board on all of these stocks. Vardhaman Textiles, Gokaldas Exports, AKI, NDL Ventures, all of these companies, they show to be, showing us some ticks on the higher side as well. Siaram Silks, Nahar Spinning Mills are also up in trade. These are all the stocks that are reacting to the sharp tariff hike that Donald Trump has done for countries like Bangladesh. So India currently has a 10% tariff. Across the board, the baseline tariff, but with Bangladesh getting a 35%, we have a 25% differential there, and that's what probably is putting in some kind of a steam back into the textile names. Arpit, first to you, how would you look at this move on the textile sector? What looks good to you here?
Sakshi, if we see overall this sector, it has been a very choppy. So if you talk about definitely from the news sensitive wise, definitely there's a huge action across the space. But if you look at the setup wise, chart setup wise, few counters are relatively outperforming and they are in secular uptrend. So if I look at the first counter, that is KPR Mill. So if you see the chart structure of KPR Mill, it is on the monthly and the weekly time frame classical in an uptrend, and slowly steadily the base of the stock is shifting higher. On the immediate basis, if we see it has formed a strong base formation around 1050, 1100 levels, trading above a short term moving averages almost in the range. It has given a range breakout above 1120, 1130. So I think KPR moves slowly steadily can see a good move towards 1250, 1300 levels. Apart from that, if we see from a more of a tactical play and from a quick momentum, if we see overall Vardhaman Textiles, so Vardhaman Textiles today it's already open gap up by almost 6 to 7%, and I think further momentum can be seen above 530 towards 560. So from an immediate basis, Vardhaman can see next 5 to 6% move above 530 towards 560 levels. So these two counters would be on a radar within this space.
Okay, got that. Dharmesh ji, both with Vietnam, where the mini deal has been signed, and now with Bangladesh with the fresh tariffs, what would your order of preference be for the Indian exporters in textile majors?
I mean, if I'm not wrong, I mean, to my understanding, 26% is the total tariff which Indian textile companies are paying and not the 10% mark. So that leaves the window already a very narrow kind of a window. Just going by it, this is the rate which prevails, and there is no further addition to the current rates which these companies are paying. Then the order of preference would be, I mean, Welspun looks pretty attractive to me on the valuation metrics, followed by Arvind Mills. Gokaldas, I mean, it's already very expensive and it has been showing today also the stock price action is quite high. But that has to be taken with a pinch of salt just because of the valuation thing which is there. Trident is one company which has been shaping well,
Okay.
but the promises have not been delivered. Only my gut feel is because there are many things at stake. I mean, agri, dairy, and Indian government has to negotiate. So while you are taking something, you have to give back something. So what give back India will give, that is, I mean, the sectors, one of the sectors can be even textile, where things may not turn out in favor of domestic companies.
Okay, fair point. All right, Dharmeshji, we'll leave you at that. Thank you so much for being with us on
Thank
the
you.
program and helping us navigate through a lot of points there. Appreciate your time with us on Business Today. Thank you so much. All
Thank
right,
you, Sakshi.
viewers, we will continue our conversation with Arpit there. Arpit, textile space we've been focusing on, as an impact that there could be. But beyond this also, are you looking at any key sectors that could be in focus because of the tariff announcements that are continuing to come in?
So actually, if you see from last couple of days, very selective sectors have been in momentum, and I think if you look at the sectors such as OMCs, so where the overall market has been quite dull, but relatively since there is been fall in the crude prices, and definitely the beneficiaries has impacted on the OMCs. So if you look at the chart structure of BPCL and HPCL, they are in huge outperformance, and technically also if you look at the setup of BPCL, a classical strong counter on the monthly and the weekly scale. So BPCL gave range breakout above 335, 340 levels, and from there on, slowly, steadily, the stock is moving higher. Where the market or the broader market has been stuck in a range, but this counter is slowly, steadily moving higher. So going forward, also, if you see the relative outperformance is likely to continue, and if we see BPCL, the all-time high is just around 375, 380 levels. So slowly, steadily, definitely we can see a good uptake in this counter going forward. Along with that, if we look at the chart structure of HPCL from the similar space, a very strong counter near life high territories, and definitely from here on also we can see good uptake momentum. So I think these two counters would be there from the OMC space that we are quite bullish on. As soon as we see some more recovery in the market going forward, this too is likely to outperform.
Okay, got that. This is likely to outperform. We'll look at some of the pockets that are buzzing. Private sector banks are taking the limelight back to their fold. Kotak Mahindra Bank is leading with gains both in the F&O as well as in the cash markets as well. Now 0.8% higher for the private sector banks. So give us an overview on the private banks right now after some days of, kind of a lackluster move. They are kind of claiming back their position. Is it going to be sustainable? Should one again focus back on private sector banks? And on Kotak Mahindra Bank, what would your suggestion be?
Was talking about private banks, actually, if you see overall the setup of the index, from last 3 to 4 months, Bank Nifty has been slowly, steadily moving higher, and this was the first index to lift life high territories, followed by the financial index and the private bank. So that clearly indicates that the uptrend is intact. But as soon as if we see, there are phases where the index consolidates, and then after a huge consolidation of 5 to 7, 8 sessions, then the next up rally happens. Now on the immediate structure, if we see the private bank structures of all the main four heavyweights, HDFC, ICICI, Kotak, and Axis. Relatively, HDFC and ICICI both are got stuck in a range, and I think definitely going forward, as soon as the results season is also coming onto it, definitely they can provide some action going forward. Now talking about Kotak as a whole, after its company update, definitely we have seen a huge positive opening, and if we see the monthly structure of Kotak Mahindra Bank, it's in strong uptrend. Retested its previous breakout zone around 2100 levels on the weekly scale, strong bullish candle, and I think from last almost 7 to 8 trade sessions, it was finding hurdle near 20 to 30 levels. So I think a sustenance above 20 to 30 can definitely give more momentum towards 20 to 50, 2300 levels. So I think chart setup wise, Kotak looks strong. On the immediate basis, 2190 would be the supports.
Okay, got that. So that's the viewpoint. Kotak Mahindra Bank, meanwhile, viewers, has also reported its business update. We have seen a net advance at the end of Q1 that stands at 4.45 lakh crore rupees, marking a 14% increase over 3.9 lakh crores in the same quarter last year. Sequentially, the lending activity has also improved by 4% compared to about 4.2 lakh crores in March of 2025 quarter. Now, on the liability side as well, the bank's end of period, that's EOP, total deposits have risen to 5.13 lakh crore rupees, again up 14.6% as well from Q1 in FY25. Remember, what we are also given to understand is that sequentially also there is an improvement about 3% odd. So we have brokerage houses, continuing to keep a buy on Kotak. Jeffries has given a 2550 kind of a target now on Kotak Mahindra Bank thereof. So keep an eye out on this space as well. Beyond the private sector banks, on the NBFC space, Arpit, where are you keeping your focus on? There are two aspects. One is, of course, the wealth management companies, broking companies, and the large NBFCs, on that same space as well. Why am I talking about the brokerage and capital market stories as well? Is also because how we are seeing this Jane Street issue that we were discussing with Ramesh ji a little while ago is raising fears of clamp down on the volumes in case such, hedge funds which used to carry out large trades are absent from the markets, and therefore all the broking companies have been coming under some pressure from last Thursday and Friday, and we've been seeing some days of weakness in these stocks. How would you look at that aspect?
So first talking about the issue that is going on, if you see, as we have seen from last couple of days, definitely this theme has been in action. And if you see overall, definitely if any player or any hedge fund definitely plays a big role in the market, so the impact would be there. But the important part is that how from next 15 to 20 days, it will impact the overall volumes wise. So if you go going forward, if you see the overall volumes in totality from last year to now, definitely it has reduced because post the discontinuation of the weekly bank nifty expiry. But however, now if we see Tuesday and Thursday as a key days for Sensex and Nifty expiry, so I think definitely there would be a knee-jerk reaction that we have seen. But eventually, I think along the course of time, how it shapes up for the next couple of months' time, we have to see the overall impact. And I think eventually, if you see the overall market wise, if you don't see much action, to definitely get absorbed and eventually the smooth ride will going on. But yeah, definitely there's a knee-jerk reaction that is likely market to take it in that action, and relatively that sectors would be affected. But eventually, I think right now it's too early to make a call on it. And I think as things shape out in next couple of weeks time, that would be a better time to make a call on that.
Okay, got that. So that's the view that is being shared on the front. Let me talk a little bit on some of the other key stocks. In fact, let me bring out for all our viewers after the first 15-20 minutes of trade is out, the stocks that are hovering higher. You have AKI India that's up. You have Lokesh Machines that's up. Siaram Silk, Vibhor Steel Tubes. I think yesterday it was up 20%. Today again 7.5% higher. Mirza International is up. Remember, the leather and footwear stocks have been coming back in focus. It was Relaxo, some gains on Bata. Now you're talking about Mirza International as well. So we'll focus on that theme. Paper stocks were coming back in focus. Sugar stocks were coming back in focus. Periodically, you are seeing these smaller pockets also hovering higher. Today again, there is Venus Pipes that's higher. Bellrise Industries after the IPO, you're seeing about a 5-6% move on this one. Indocount Industries is up. Vardhaman Textiles we marked out for our viewers, that's up. Alok Industries is higher. These are the stocks that are hovering up in trade. Anything from the broadest index, Nifty 500 basket, Arpit, that takes your attention that could carry on the momentum?
So actually, if you see from last couple of days, if you see the prime sectors, which are the major sectors of the contribution sector, they are relatively dull. But all the peripheral and the supportive sectors that have seen some traction going forward. So if we see sector wise, definitely as you talk about selective footwear stocks, so definitely some action was seen within this counter. But if you look at the chart setup of, for example, Bata, so where the counter has relatively from long time it has underperformed. But if you look at the monthly and the weekly setup, somehow the base formation is seen on the monthly and the weekly setup wise. And I think from here on, definitely slowly, steadily, a momentum above 1280, 1300 can definitely see some uptake going forward. So I think from the footwear space, Bata from the current junction, the risk reward wise looks favorable. However, 1280, 1290 would be a key level to watch out for, where we can see more uptake going forward. Apart from that, one more space that I would like to discuss is FMCG. So FMCG is a sector where we have seen very much less action in the last couple of weeks to months time. However, post that yesterday, we have seen some action across the FMCG stocks. And if you look at these typical few chart structures such as Britannia or Marico, where the entire FMCG index is underperforming, but definitely slowly, steadily, the momentum has been seen in this counter. So I think from the FMCG, Britannia relatively looks good, where market is a bit dicey to choppiness. Slowly, steadily, Britannia is relatively outperforming. If you see the chart setup on the monthly and the weekly setup, it is on the verge of giving a major range breakout of 5,900. And I think definitely we can see good momentum towards 6,000, 6,100 levels going forward.
Okay, fair point. Let's look at some of the other aspects as well. Let's look at the commodity space, oil and gas, metals, and what is the fresh move that you expect here? What is your approach to these spaces? They have been showing us a momentum of late, but will this be sustainable is the key question.
So to first talking about metal as a space, metal as a sector has been quite tricky. So if we see over the setup wise, definitely we have seen good bounce back from the lower levels. But from last couple of sessions, it has again got stuck in a range. Whether you talk about Tata Steel, JSW Steel, or Jindal Steel, the major metal players. Along with that, if you look at the chart structure of Hindalco or Vedanta, so relative we see the chart setup wise, all the counters have been trading in a range. But if we see follow buying, if we can see the counter that is relatively looks better from this space would be Hindalco. If we see the chart structure of Hindalco, a very strong base formation on the monthly scale around 670, 680 levels. On the daily scale, the stock is consolidating between 680 to 720 levels, holding above 10 DEMA. And I think definitely when we see some momentum in the metal is this counter can relatively outperform. Apart from this, if you talk about the oil and gas, definitely Nifty energy space sector has been quite outperformer. Whether you talk about the OMCs or the gas stocks, MGL, IGLs of the sector, relatively they have been in quite better shape. And I think going forward also, when we see some good recovery in the market, energy stocks, particularly OMC, is likely to outperform. And if you talk about Reliance as a whole, the biggest heavyweight within this sector, the stock is holding very strong. So in spite of market dullness, the stock is slowly, steadily moving higher from 1500, 1480 to 1520, 1530 levels. So I think Reliance itself can lead from here on slowly, steadily towards 1560, 1580 levels.
Okay, got that. Let's take the next question. With Arpit, I wanted to understand, when it comes to the defense names, these spaces were again, something that, was coming back into flavor. Huge orders in the last couple of sessions coming in from the defense ministry as well. 1 lakh crore rupees worth of acquisitions have been cleared, which actually means more and more order flows can actually come in. That despite the strong move that we've actually seen for the defense stocks in the last couple of months already, does it give you the confidence that one can keep on investing at every stage on the defense stocks, or is there a sense of caution that's emerging now?
So now talking about defense as a sector, Sashi, if we see when we've seen bottom out in mid-March and mid-April, where the entire market bottom out, from there on, defense was the first sector that was leading from the front. And the index itself has rose almost 30 to 35% in last couple of months. And definitely after such a big uptick, definitely index and the stocks tend to consolidate. So overall, if we see the sector-wise, overall, definitely there is some more steam left in the sector going forward, but it's definitely difficult to play it out on the daily basis. So going forward from a 3 to 6 months view, definitely we can see more upside from here on, because the good part is that in spite of market dullness or weakness, the sector is holding at higher levels. So there is consolidation, but there is no panic selling or the structures are getting weak. So I think our sense would be that it's better to create a basket of 3 to 4 counters within this space. So counters such as BEL, HAL, Musdog, and just keep adding to that in a staggered way from a 3 to 6 months perspective. And from here on also, we can definitely see good returns. Obviously, you have to be a little bit patient enough, but overall, looking at the structure wise, the structure is still promising and can be added in 3 to 4 tranches going forward.
Okay, fair point. I hope this has also helped all, understanding as to how to go about this space as well. What about the FMCG pack? That's, I think, an interesting one to start off. Yesterday's sharp move and what follows, next is the key question there. It's been one of the biggest laggard spaces that we've seen in the markets, hasn't participated in the previous rally or the recent one and the recovery that's happened in the markets. Finally, some signs of buying coming in onto the FMCG space, both the large and the mid-cap names as well. What's your suggestion on this one? Is, the beaten down sector now coming back into flavor? Is it the right time to look at it? Are there any technical signs that would indicate that this sector is poised to move up higher from here?
Sakshi, if we see FMCG has been a huge surprise. In spite in the last 1 year, it has been one of the most underperforming sector. And as rightly mentioned, in spite of good momentum in the market, it has relatively underperformed. And going forward, looking at the chart structure of the entire FMCG pack, so very selective counters are showing relative strength. And as we see, the relative strength is very important in this counter. And talking about that counter, within that, if you look at the chart structure of Marico, where the entire FMCG index is underperforming, but Marico was in strong uptrend, forming higher lows in the monthly structures, gave a range breakout above 700 levels. And I think going forward, as soon as we see one more momentum in this count in the FMCG index, definitely Marico can outperform from here on. So I think definitely Marico is one counter that is really likely to go with outperformance. Second would be, if we talk about the counter, that would be Tata Consumer. So if you see the overall Tata Consumer, broadly it is trading in a broader range between 950 to 1250 levels. And the immediate basis, if you see on the weekly structure, it is consolidating near 1000 levels. So I think going forward, definitely a good risk reward setup is available as it's trading near its support zone. So 1050 would be a major support zone. Slowly, steadily, the counter can head towards 1160, 1200 levels. So these two counters would be there on radar within the FMCG pack.
Okay, fair point. I hope this has also helped all our viewers out get an understanding there. Okay, from the PSU pack, I wanted to ask you, how are you looking at the power space? Remember in 2024, power theme emerged as a very strong, theme that retail investors bet big on. Everything was flying away, be it Coal India, NTPC, NHPC, Power Grid, PFC, REC. Now they have been quiet for a very long time, 8-10 months on, they have been actually staying, silent. What exactly is happening here? Do you think this theme will come back anytime soon?
Looking at the overall structure-wise, actually, if we see all the chart structure of Coal India, NTPC, REC, PFC, more or less they have got stuck in a range from last couple of months. And until now, there hasn't been any sign of a breakout on the either side of the setup-wise. So I think better to keep this theme on a wait-and-watch mode. As soon as we see some breakout on the monthly and the weekly setup, I think that would be a good time to act upon, because as of now, there is no major momentum. So I think key level, if it surpassed going forward, then only we can create fresh bets in this counter as a whole going forward.
Okay, fair point. It's 9:45. First half an hour of the candle is out. We are now mildly into the green. 25,473 can be seen on the market right now. What exactly would your approach be? What do you foresee for the day to follow?
If we see overall setup wise, banking is relatively outperforming today, lead by Kotak and ICICI. So I think definitely from the intraday bias, Bank Nifty 57,000 will be a major support zone, and till it holds above that, we can see a move towards 57, 350, 57, 400 levels. Talking about Nifty, as we have Sensex expiry also, as of now, Nifty is just moving around 25,500 levels, 20 points plus or minus. So overall 25,400 would be the intraday support for Nifty. For Bank Nifty, it would be 57,000 levels. Until this two levels are hold, intraday we can go long bias. Having said that, we have to keep one thing in mind, that upside is also capped. So you have to play within this range overall with a positive stance.
Okay, fair point. I hope this has also helped you out right there. Let me just quickly spot some stocks from within the mid and the small caps, which are now moving up a little bit. They had been lagging lower. Let me just see what else is moving here to really take a view. Trident 5% higher. Bata we've discussed with Arpit. Wellspun Living is up. Sonata Software, Dr. Lal Path Labs, IFL Finance, Brigade Enterprises. These are some of the stocks within the small caps that are buzzing up in trade. Mid caps also just toggling between the highs and the lows right now. Let me just mark out a few stocks here. Wari Energies is up. You have SJVN that's higher. Premier Energies that's up in trade as well. You have Mankind Pharma that's up. Oil India. Some of these stocks from various sectors. Steel Authority, Torrent Power, that's higher in trade. A lot of these various sectors and some of the stocks from there that are moving up in tandem. Any suggestion? We discussed the power names. What about the renewable energy names? Are you looking at an SJVN or an SW Solar, Inox, Winwari? Are you looking at any of these names at all, Arpit?
If we see the all the renewable theme, Sakshi, so relatively Inox Wind has been relatively stable, and if we see the chart structure on the monthly scale, it has been sideways. But overall, if we see the base of the counter shifted higher, and I think from here on also a good base formation is seen around 155, 160 levels, and in spite of some dullness, the stock is holding well. So I think going forward, definitely we can see good uptick from a 2 to 3 months perspective. The stock can head towards 200, 220 level. So I think Inox would be a preferred within this space, and relatively outperformance can be seen in this counter going forward.
Okay, got that. I think you know what, one more stock that I'd like to mark. I know, Arpit, you won't have the historical charts. It's Schloss Bangalore or Leela Hotels that's in focus today because, you know, of course, Schloss Bangalore owns this Leela Hotels chains. The stock is moved up today about 3.5 to 4% odd. 422 levels can be seen. There's a reason. You know, this company, after getting listed, is getting their first you know, brokerage houses coverage. A lot of them have initiated their coverage first by ratings that are coming in after getting listed as well. So BofA Securities has initiated coverage with a buy tag, a price target of 520 rupees per share. It believes the industry tailwinds and key initiatives, especially in the growth of its 5 iconic hotels and medium-term portfolio expansion is concerned, is going to be higher. Now, when we look at some of the other aspects as well, many other brokerage houses like Morgan Stanley has also come out with an overweight tag here and a target price of 549. So, brokerage houses are penciling in higher targets, covering this stock with a positive outlook as well. Leela Hotels, very, very less charts for you to study, but fresh wave of buying coming in from brokerage houses. Arpit, how would you read into this?
So as rightly mentioned, it has been listed from 2nd June onwards. So if you look at the weekly setup, after almost 3 weeks, it has given a consolidation breakout above 411 levels, almost a consolidation breakout after 17 sessions, strong bullish candle surpassing its 50 DEMA. So I think definitely move can be seen towards 430, 435 levels. That is the previous supply zone. So I think good support near 411 levels for an upside move towards 435, 440 levels.
Okay, got that. All right. Thank you so much, then, Arpit, for being with us on the program today, helping us all and our viewers to understand various pockets and how to approach them at this point in time. Thank you. Appreciate your time with us.
Thank you.
All right, 25,480 viewers. We'll start wrapping up the trade for the morning edition of Market Today. It's 9:50 right now. You can see a lot of moves in several smaller sectors today. Textiles is definitely reacting to the news flow of tariffs being announced for Bangladesh. Remember, a Vietnam mini deal also came in a few days ago. And India still, in comparison to these other nations, has a leverage because we are at a 10% baseline tariff. So these companies, they are looking at leveraging this opportunity that exists for exports, you know, to the US at this point in time. So you can see a Vardhaman Textile that's up 7%, KPR Mill that's up, CRM 6 that's up in trade, Dornier Industries. All of these names are actually higher in trade. Raymond Lifestyle is up by 4.5%, Arvind Limited, you name it. All the stocks are moving up very, very smartly in trade today. Let's also look at some of the other names in the top gainers list. Alok Industries is up 11.5%. Trident is up 5.5% in trade. But of course, in the Nifty, it's being led by the private sector banks. Kotak Mahindra Bank 3.5% higher. It's the top mover there. And Eternal, that's parent of Zomato, that's also picking up some pace at this point in time. All right, we'll leave you at that, but do stay tuned. Throughout the course of the day, we are going to be covering a lot of news from the world of what's happening on the tariff front, what's happening on the SEBI front with respect to increased scrutiny on you know, players like Jane Street and hedge funds that are likely to manipulate the markets to protect the retail investors. Very, very important news developments that you must definitely catch up on to. So we'll be helping you understand all of that at 12 noon. I'll be back with daily calls to answer your questions. Stay tuned.
Hello and welcome to Business Today. I'm Siddharth Zarabi and you're watching Market Masters. Today with us, one of the most famous names in the Indian stock market, veteran investor and chairman and co-founder of Motilal Oswal Financial Services, Ramdev Agarwal. Namaskar, welcome to the show.